Welcome back to another Tech Talk from MarketEdge.com, your source for technical analysis. This week, David Blake is with us, our resident CMT, to discuss last week's stock market and see what to look out for this week. David, how are you doing today?
I'm doing well, thanks.
Awesome. Why don't you take us through the market?
Okay, well, last week, the big story was jobs and jobs and no jobs. And basically, we had a couple of reports that came in during the week. The first one was a big revision lower for the 24-25. I think that's from March to March time period. They revised the job growth down to a loss of 911,000 on Tuesday, which pretty much guaranteed that we'll be starting the rate cutting cycle here this Wednesday. So that was something to go by. And then we came again with another lower initial jobless claims report on Thursday. That fell all the way down to, I think, initial jobless claims went up to 265,000. That was the most in almost a year, I believe. And then continuing claims continue to hang out above 1.9 million. So a very soft jobs market. The Federal Reserve has kind of shifted their focus to the weakening jobs market, because once that kind of starts, it's a little bit, that's also hard to stop as the economy begins to slow down and people are losing their jobs. It kind of it rides into itself and kind of eats itself over there. So more jobs losses, and they have to make sure they get ahead of that so they don't get behind it. Now they are going to give up a little bit of pressure on inflation. That's to be expected. A lot of that, they're still wondering whether this is going to be kind of a one-off type of inflation report. We got the PPI last week, came in just a little bit of a tick softer, not much. And then we had the CPI. It was also kind of in line with expectations, but it was a little bit warm. And again, that's the Fed has to kind of keep an eye on that too. They don't want to start cutting into this, and all of a sudden, because of the tariffs, we start to see inflation start to tick up to maybe 3.5%, 4%, something like that. Because of the jobs data, we did see rates start to fall last week. We got down to, I think the 2-year actually dipped below 3.5 intraday on Thursday or something like that. It ended up at 3.56. I believe it's down a little bit today also. That initial jobless claims went to 263,000 last Thursday. That was the highest since October of 2021. As we went into this week, right as today, as I looked at the CME FedWatch group, we are at 100% expectations for a rate cut on Wednesday. And they actually, because of the jobs, we're looking at probably a 92% probability of a second rate cut in October. And that's just up from 53% a week ago. So they're kind of piling on to this. They have backed off a little bit of possibly a 0.5% rate cut this week. And you don't want to see that, because I think if they would come in and cut a 0.5 point, then I think investors would start to think that perhaps the economy is slower than what we're looking at right now, and that might shake people up, and you might actually get a little bit of a sell-off with something like that. So anyway, so we're going along. Last week we do see several new records by the major averages. The Dow made a new high on Thursday. So did the S&P 500, the NYSE, the NASDAQ 100. The NASDAQ made 5 new highs in a row, and it's making another new high today. It's up 100 some points. So we have 6 days in a row for the NASDAQ making an all-time high, which is pretty strong. Across the board, we had the sectors going up. Technology, utilities, communication services were the strongest sectors. They were up almost 2.5% or more, with technology, communication services, and consumer discretionary posting new record highs. Okay, today we have an outperformance again by the communication services sector, as Alphabet is making a new high. And then last week we had Elon Musk bought $1 billion worth of Tesla stock, which is the first time since 2020. As far as what lagged last week, consumer staples, materials were a little bit lower. Gold prices also traded a new high. It crossed above 3,700 before settling around 36.82. I think it's inching up again today. So you have a lot of stuff going on with the market making new highs. You don't fight the Fed. And again, you're probably going to see the market just keep inching up here. Well, Fed Chair Powell begins to talk. He gives a little speech at 2:30 on Wednesday. And then basically we want to hear a pretty dovish Powell just talking about that he can see more rate cuts coming by the end of the year, and that should keep the market, just kind of nudging a little bit higher as we go through September. As far as the technical condition of the market goes, we're still climbing that wall of worry. Again, as long as you have the major averages trading at new highs almost across the board, you can't argue with the market not being strong. MACD, which is a short-term trend gauge, crossing the bullish ground for most of the different indexes. And you also have strong momentum, but we are getting close to being overbought by several measures on some of these. And yeah, you'll probably hear some people talking about the market's overbought here, especially if we get a little bit more of a bounce into tomorrow and Wednesday. Which is, we've had quite a run here in September. Everyone was kind of expecting, including me, some seasonal weakness, which we did not get. And because of that, again, you're moving up into the overbought area. You have the RSI getting back up around 70. We'll see what the MarketEdge S&P short range oscillator is, the SRO. Here over the next day or two. I think we're up around 2.4, I guess. So we'll see where that ends up here over the next couple of days. When that gets up, especially around 6 or 7, usually you'll see a little bit of a pullback coming down from that. Now, we also saw some of the secondary indexes outperform. We had the Philadelphia Semiconductor Index hit a new high last week. It was up 4.5%. Then we had the small cap Russell 2000, which a lot of people are talking about right now. It was up for a 6th consecutive week. So it's closing in on a record high. That would be the first record high since November of 2024. And I would expect to see that possibly make a new high this week, as the small caps are one of the benefactors of lower rates. They'll begin to borrow more to grow their business when the rates are falling down. Underlying market breadth was positive. We had the NYSE advanced decline line, which I look at as a leading indicator of market direction. It made several new all-time highs. And you even had the NASDAQ AD line rose to its best level since July. So that was good. Also, I believe we had on the NASDAQ, I wrote, we had 481 new highs, 52-week highs on the NASDAQ on Thursday, and 244 on the NYSE. That was the most since 2024. So that's confirming that we're seeing a broadening out and you're getting more leadership in this rally to new highs. As we make new highs, you don't want to see it thinning out. And now with the new highs on the NYSE and NASDAQ, they've outnumbered the new lows now for 18 consecutive weeks. So that's, again, a nice sign. It means that we're not looking at probably, too much thing. You want to see this thing broadening out as we're making these new highs. And then finally, as far as the sentiment index goes, we did see that actually tick up a little bit. And again, you're not frothy. And when you're making new highs, a lot of times you'll hear people talking about the FOMO, fear of missing out. They've got to get in this market. It's making new highs. And we don't seem to be getting that excessive exuberance that you would expect to see at new highs. In fact, retail investors, the American Association of Individual Investors, printed retail bulls at 28% last week. That's a 6th week below the historical average of 37.5. So they're way below where normally you would see the retail bulls be. Let's see here. And then retail bears, that's up here around 49.5%. That's the most bearish that retail people have been since May. So that's something to watch. The institutional players and hedge funds, they're almost fully invested in here. They went up to 86.1%. That's above the second quarter average of 73.3%, but down from where they were 3 weeks ago when they were around 98% invested in equity. So again, things are strong. What you want to watch this week is, we'll get the rate cut on Wednesday. You want to make sure that we don't get a bearish rate cut. In other words, Powell comes out and says we're going to cut a quarter point, but we're worried about inflation, and I don't think that may be it for the year. I think he's going to pretty much admit that they have at least 1, maybe even 2 more rate cuts by year end. I think for October, the CME group, it looks at 78%, and I think by December, it's at another 100% possibility for a rate cut. So you don't fight the Fed as long as they're on a rate cutting cycle. That should keep a floor under the market. It's still, the big thing here is valuations. I read today where the Mag 7 makes up something now of something like 30% of the S&P 500, the weighting. That's an all-time high. And then somebody was saying that the Mag 7 now has a market value of something like 20 trillion, but their market value is as big as the whole Chinese economy. So you have to take things like that into consideration. If one of those would get hit hard by something, it would pull the whole market down. So what some of the investors are hoping is they're going to see maybe the Mag 7 kind of slow down their momentum, slow down their earnings power. And behind that, you'll see the other 493 stocks begin to grow their earnings and kind of hold the market up going forward. So this week, we'll just see what happens on Wednesday. You'll probably see some choppy trading tomorrow as people kind of position for the Wednesday rate cut. And we'll see how things go from there. But at this stage, I don't think they need to be too worried about a big pullback. Even the VIX is down here to, we're down here in the 14s, and that shows you the traders aren't really worried too much that we're going to have a falling out anytime soon.
All right, very good. That's some reassuring news today. Thank you, David. Anything else you'd like to add before we go?
No, like I said, this is a big week for the rate cuts, and I would just concentrate on that and just hear what Powell says on Wednesday afternoon. He comes on around 2:30 for his press conference, and that way you'll get also an idea of what the other Fed governors are looking at. The previous Fed FOMC meeting, you did have three governors think that they should have cut before, and that was a sign that they were going to cut this time. And you want to make sure that they're not holding back or thinking this is a bad move. You want to have a pretty dovish Fed statement coming out on Wednesday afternoon.
Perfect. Thank you so much for that, David. If you have questions for David or anyone else on the MarketEdge team, please feel free to reach out by sending us an email to support@marketedge.com. Otherwise, if you're watching on YouTube, please like and subscribe and comment your questions here. We'll see you next week.